Hey there, this is David Cox, Senior Portfolio Manager at Financially in Sync at Raymond James in Waterloo, Ontario, Canada. Today on the webinar, Where Do We Investors Stand? It is Friday, January the 9th, 2026. Happy New Year. Start off by our usual weekly sort here. You can see silver, of course, that's been big news here for quite some time. A really strong rally here. There's the small caps, mid caps up at the top of the list. Reminder, we can see the short, intermediate, long-term trend. You can see down on the bottom, we've really got downtrends happening in places like oil and US dollars and bonds. I mean, that's really what's happening here. So again, lots to dig into. Let's get right into it. Big news this week, Venezuela, again, overtaking government and again, essentially taking on the reserves of Venezuela. I thought I'd show a quick chart here just of where the oil reserves are in the world. You can see down at the bottom here, Venezuela's got the largest reserves in the world, and they haven't been producing very much. And that has been something that has been on the radar, of course, of those that need oil and want oil. And again, the U.S. has swooped in here and again stood in to the point that the U.S. oil companies look poised to suddenly have that opportunity to go and invest in that oil. And so from that perspective, there's actually pretty big news here when you think about it from Canadian perspective too. Like a lot of dirty oil that's very expensive to refine and to clean, essentially coming from both Venezuela and Canada. I mean, this changes the dynamics potentially of considerably about how these things go going forward, because Canada, of course, wants consumers of its oil and wants to be able to sort of sell those oil. And the issue, I think, is that, you know, when you've got a new arguably set of reserves here that are being unlocked, we need to go and evaluate what that means for all the players involved. Now, again, in the short term, on the left side, we've got the energy stocks in the US, that's XLE. On the right side, we've got the Canadian energy stocks. The US energy stocks broke out to a short term, you know, they rallied into strength here. So this is the day here I'm circling when the news came out, which was Monday morning essentially. And then on the right side, we've got the Toronto energy stocks, they sold off. So again, to me, that makes sense. And again, what Canada's response is or how this ultimately develops, I mean, let's be serious. You know, changes don't happen overnight, but it is definitely monumental news to some degree here. Let's just remind ourselves though that oil has been in a downtrend for quite some time. On the left side, you can see crude oil has been declining for the past several years, ever since it was free back in 2020. And on the right side, the Canadian dollar, which actually tends to be a leading barometer, both from bottoms, as in the Canadian dollar has tended to bottom ahead of oil. It has tended to also top ahead of oil. But either way, the Canadian dollar, which did bottom early last year in the face of fear about tariff wars, as I pointed out at the time, it did bottom there, but that does not mean it's suddenly in an uptrend. As you can see, I got a downsloping trend line on there. And again, yesterday we're sitting around 72 cents. So the bottom line is this is an area of the market that has really been pretty weak. So we'll continue to pay attention to it. But at the same time, silver is when all the action has been here. I've put it at the biggest bar against. That was December 29th, a very large outside reversal. I think the downside was about 13, maybe even 14% from the highs. What that means is the investor who paid that high in the morning lost 14% or so to the lows of that day. Now, there was rumors that a financial institution, possibly a large bank, was involved on the short side and was being squeezed and being sort of, again, financially put under pressure, margin pressure to cover their positions. I don't know. All I know is volatility that rather has risen materially, right? And so what that means is the day-to-day swings here become quite large. And so as investors, we have to be very, very careful, because again, there's a huge difference between buying something that's up, 8% one day or down 10 the next day. And again, after rallies, which is certainly what's happened in the course of the last several months, I think we want to just continue to be aware the large picture trend looks absolutely fantastic for silver. At the same time, it is very overbought and volatility has increased so much here that you've got to be very, very careful, in my opinion. Let's check in on Bitcoin and the BitQ, which is just one of the crypto ETFs we've certainly talked about many times on this webinar before. On the left side and the right side, we've got weekly charts. You can see higher lows being made in both situations. Again, the bottom of those trend lines is actually at the same point. So you can see that the crypto stocks, rather, the BitQ, appear to have been relatively weaker on the chart, but essentially they've got higher highs and higher lows, both of them. And so at this point, both have been, weekly oversold, if you will, and I think they're starting to turn upwards here. So we're going to continue to pay attention as the year unfolds. Now, the semiconductors are no stranger to this webinar, and semiconductors on the top left, you can see just made new highs this week. But again, the leadership is changing a little bit here. So on the top right, we've got Broadcom, much talked about, came up with that earnings bar there that I circled in red. Has been pretty weak actually since there. And you can see NVIDIA, really the largest stock that exists, has also got a potentially lower high on the chart here. And again, again, is definitely showing some wear and tear, whereas Micron has been sort of one of the massive leaders here. So again, remember, rotation happens. Rotation happens among sectors, or it happens among markets, it happens among industry groups, and here it happens among stocks. Another way to dig into what happens and drives markets is to look at what's called contribution, which is, again, every stock has a weight in the same thing that your portfolio, my portfolio, this ETF, the semiconductor holders, every stock has a weight. How much that stock goes up or down contributes to the performance of the overall investment. You can see there's Micron up at the top of the list, has contributed in the last 3 months 2.4% to the gains in the SMH. You can see that NVIDIA and Broadcom are not even on the list. So again, they're not top contributors, and that's not a surprise. I just showed they have been relatively weak in the last few months. Now, I want to talk about this as we get into 2026, because I believe Canada has approximately, somewhere between kind of 40 to 60% of mortgages that are set to renew in 2026. I think this is very important. The left side, a little hard to see the kind of text there, but we've got the first negative 3-year trend in housing prices going back to the 90s. So we got about a 40-year pullback, not even a pullback, rather. I should just say that's the first time we've had falling housing prices in 40 years. I think that's pretty important to understand. Now, again, the reason, if I was to have shown more history on what's on the right side, which is the 5-year yield, which is essentially what all the Canadian mortgages tend to be tied to. This is the bottom here in 2020, right? Interest rates surged, and really since then, they've been consolidating. I don't call this a downtrend. I know the Bank of Canada can go and drop rates, and we can all get caught up with that. But as I've said before, it's very, very important for context. So in this point, the move in the last that happened in the first few years as globally yields moved upwards, this to me is consolidation. This looks like positive consolidation, meaning I continue to fully expect that yields are going to surprise us on the upside. And that means that, again, things like mortgage rates in Canada are going to continue to sort of remain stubbornly high, certainly a lot more high than investors or housing, kind of those rolling over their mortgages would like to see. But the bottom line is that it's important to understand this is a debt, a full economy, right? Everyone has borrowed, the companies have borrowed, countries have borrowed. The world is, it is a debt bubble, let's be serious. And so global yields are rising. And again, I think this is very, very important to Canada particularly. Let's focus on absolute and relative strength. This is just one cherry-picked example, right? So gold has been strong, precious metals have been strong. Kinross Gold is a Canadian gold producer, dual listed, letter K in Toronto and KGC in the US. These are 3 charts, but really they're all the same chart, except on the bottom. In the bottom, we're plotting it versus gold bullion itself. In the middle panel, we're plotting it versus the gold stocks. That's the XGD in Toronto. And on the right side versus the Toronto market itself. So what you should see an uptrend in the absolute sense, which is the top. And then in the bottom, we've got relative trends versus all the assets. That to me ticks all the boxes, sounds like a great relatively and absolutely rising stock. And again, I think trend following works, and that is exactly why. Let's pick on just again, look at this chart again. I showed it last month, but again, lots going on in commodity front, right? So everything from lithium to gold, platinum, palladium, copper, mining, rare earth, it's all happening. These are all uptrends. Take a look at these charts. So again, to me, this is actually, again, speaking to commodity inflation. And again, I think that's something very, very important as 2026 develops, because again, going back to what I just said about yields, again, commodity inflation that ends up surprising is going to cause issues because yields tend to rise in that environment. So I think this continues to be a very important theme that we want to understand, and it does have tremendous implications from an allocation perspective, not only sectorally, but also geographically, because again, the composition of many markets outside of the US is actually quite different and not so technology dependent. We're going to finish off a sector watch here. There's the gold stocks in Toronto up on the top of the list, and on the bottom, there's the energy stocks in Toronto that we did touch on. You can see mostly uptrends, but certainly everything to do with defensiveness, and that tends to be staples. It tends to be real estate, it tends to be things like utilities and again, energy have been weak. And so let's continue on. Let's keep an open mind, see what happens in 2026. The trend remains upwards for the broad markets. And again, I had a couple of appearances. I was on CNBC Arabia this week. Of course, it's in Arabic and it's a little challenging. I didn't even send out the link because most of you don't speak Arabic. Next week, I'll be on Investing with IBD podcast with Justin Nielsen. I'm very excited about that, and I'll be on Wednesday. I will certainly send out the link, and you will have that opportunity to view that in the future. Please follow me on X. I'm at David Cox RJ. Thanks again for your time this week. This has been David Cox, Portfolio Manager at Financially in Sync in Waterloo, Canada.